Hey, this is Rob, founder of Koyfin. I wanted to show you how model portfolios work and how to create reports from model portfolios either for proposals or comparing model portfolios versus another model portfolio. Let's get started. Model portfolios are located under the portfolio tools section. And to quickly go over how model portfolios fit in with the other tools, model portfolios are a way to create a portfolio that's allocation based. So all the positions in the model portfolio are going to be based on percentages of the overall portfolio. Let me just give you an example here. So when I click into my aggressive 80-10-10 portfolio, all my portfolio weights here is in percentages, and when I create a portfolio, these are in percentages as well. This is different than, for example, a client portfolio or my portfolio. Client portfolio is where you have a collection of portfolios that typically represents your client's portfolios. So for example, if I have Mark Smith Prospect here and I have Mark Smith's portfolio, when I go to edit or create the portfolio, I input the quantity here of the position. So there's a concept here of having the quantity, the cost per share, the purchase date, and consequently, I then can have a P&L in my portfolio for each of those positions. I also have lots here that are calculated for different times or different lots that I bought the ARK ETF. So client portfolios and my portfolio as well, which allows you to create one portfolio. Client portfolios allows you to create several portfolios, as well as to integrate with Schwab, our first custodian integration. But this allows you to import portfolios with positions, whereas model portfolios allow you to create portfolios that are allocation based. So that's important to understand. Let me kind of go over how to create a new portfolio. So you would click the add new button. You can upload a CSV with different positions instead of doing it from scratch. So if you go down this route, we do have an example here of a model portfolio upload that you can see and then upload. But let me get started from scratch here. And just to cover some of the fields here, we have the portfolio name here, which I'm gonna call my growth portfolio. And then the allocation type is weight or notional. Even if I select notional, it'll still translate the positions into weights. So ultimately, this portfolio will be denominated in weights. The initial value could be whatever you want. So you could set it at 10,000 or 100,000. It doesn't matter. It's a random number. The currency here, you can select the currency that the portfolio price is in. If you're a US-based investor, you probably want to keep US dollars. If you're a Canadian-based investor somewhere else, you may want to change this home currency. And that way, all the returns are converted into that currency. And then choosing a benchmark. This is important for a lot of folks in terms of being able to select a benchmark. We allow you to select an ETF as a benchmark. So if you wanted to benchmark your portfolio to the S&P 500, you could select the SPY ETF. You could also select a mutual fund. So let's say you wanted conservative allocation fund or whatever it is. You could select that as a benchmark. And you can also create your own custom benchmark. And the way you create your own custom benchmark is you basically create a model portfolio and use that model portfolio as a benchmark. So previously I've created a model portfolio called a 60-40 portfolio. In that portfolio, my positions or my allocation is 60% stocks, 40% bonds. And so if I select this portfolio, it's now the benchmark, and my model portfolio that I'm creating here is going to be comped towards this benchmark. I'll show you what this first common date does, but basically this is the start date of your portfolio. You most of the time want to have it on first common. Rebalancing period is how often the portfolio rebalances. So you're going to set the weights here. And if you are rebalancing monthly or quarterly, the portfolio is going to change the weights in that frequency. You could also set the rebalance to none, and that way the weights are going to float. The advisor fees is something that you could set as well. So if you wanted to charge advisor fees to this portfolio, you could set the collection period whenever you want and have the advisor fee amount here that's going to come out of the performance of the portfolio. Let's start inputting the portfolio here. So I have my cash allocation here that I could change. And let's say because this is an aggressive portfolio, I'm going to have my QQQ ticker here, and I'm going to make this 60% of the portfolio. I'm also going to add maybe SPY as my other ticker, and maybe make this 10% of the portfolio. And then I'll have an allocation here to TLT as my bond allocation and make that 30% of the portfolio. And you can see here the weights add up to 100%. You can also, if you wanted to equal weight the portfolio quickly, you can click on this menu item and equalize the weights, and that would equal weight everything to in the portfolio, or you could reset the weights to 0. But this is my portfolio. So what this means is that this is my allocation. This portfolio starts in 2002, and every month, because I have monthly rebalancing, it's going to rebalance to these weights. And actually, let me set this to quarterly just to show you what it looks like when I load it. So this portfolio starts at 2002 and rebalances quarterly, and let me create my portfolio. And so here's my portfolio. This is the summary tab. I could see here kind of some key stats, including the expense ratio, the holdings chart, the holdings table, and the style box. I'll go through kind of some of these and other tabs in more detail, but wanted to kind of go over these fields are here because these are important. So the target weight is the target weight that we set. And the portfolio weight is kind of the portfolio weight today. It's the current weight. And the reason that this current weight is different from the target weight is because we're rebalancing quarterly. So over the past, right now, I'm recording this video in November 2024. The equity market has done really well, or has done better than the bond market. And that's why the bond market has, or my bond allocation has underperformed. My equity allocation has outperformed. And that's why this has deviated from the target weight. And it's going to be rebalanced to this target weight at quarter end because I have quarterly rebalancing. If I change this portfolio and I say, let's say I wanted to rebalance never, so I'm setting it on. So that means in 2002, I'm going to set my portfolio at 60, 10, 30, and I'm never going to rebalance. So it's just going to rebound. It's not going to rebalance at all. And you can see here, because my portfolio since 2002, my equity position has done so well, even though my target weight is 60%, or my original weight that I wanted to set is 60%, the portfolio weight here is 90% because equities have done so well, and I never rebalanced this portfolio. So that's why there's such drift. Conversely, if I set the rebalancing period to daily, that's going to rebalance every day. And so my portfolio at the end of the day is going to equal my target weight because I'm going to be rebalancing every day. So that's important to note. Another thing to note is you can change the allocation over time. So let me change this back to quarterly. And even though this is my rebalancing period, I can have different allocations dynamically, historically. So let's say, because this is my initial allocation in 2002, let's say after 2009, we became a little bit more cautious. So let's say in July 31st, 2009, we actually decreased our allocation to be 30% QQQ and increased this to 20%, and basically increased this bond allocation to 50%. So what that means is I changed my allocation. This was my initial allocation. I changed my allocation to something differently because we had maybe a different macro outlook, or the investment committee decided to change this model portfolio. So now this model portfolio will have these weights. And when I click Save Changes and Calculate, this is going to then calculate the portfolio based on my latest allocation. So you can have as many different allocation changes as you'd like here. So to the extent that you have a investment committee where you change the investment weights pretty frequently, or the target weights pretty frequently, you can reflect those here, and that'll calculate the performance historically based on these rebalances, as well as rebalance quarterly to your target weights as well. The other thing I wanted to mention is the start date, or this first comma date. Right now, the way it's calculated is it's the first date when all these securities start trading. So one of these securities started trading in July 26, 2002, and that's why the history is limited to July 26, 2002. And let me just get rid of this allocation period to show you what I mean. So if I have this starting July 26, 2002, let's say I added the ticker Reddit, which IPO'd in March 22nd, 2024. and I make this a 10% weighting, and now I have to take this away maybe from here. So my portfolio has 100% allocation, but you could see that this portfolio now starts trading in 2024 because the first common date, the first date when all these securities are available, is March 2024. To the extent that you want a longer history, there is something that you can do. So what you can do is you could actually create two different allocation periods, one before the IPO or the start date when this starts trading, and one afterwards. So for example, I would add a new allocation here, and I would add a allocation on March 25th, 2024. And so maybe until March 25th, 2004, I would have a 0% Reddit allocation. And after March 25th, 2004, I would have a 10% allocation. So what this does is it basically allows me to have a much earlier first common date, because now this Reddit position, even though it starts trading in March 2024, I have a 0% weight up until then. And then starting on March 25th, 2024, I have a 10% weighting. And that way my portfolio can start in 2002, and I don't have to be limited to that time frame of Reddit. The other thing that you can do here, which is really useful, is create the concept of sleeves. So the way sleeves work is, instead of having a portfolio here with individual positions or individual equities, you would have a sleeve. Typically, advisors have sleeves called equity sleeves or bond sleeves. And so if I had an equity sleeve, let's say my equity sleeve was SPY and VTI, and when I added the portfolio, you could see 80-20, so SPY and VTI. And let's say I had a bond sleeve that was BSV, IC, VT, and TOT, so three different kind of securities in my bond sleeve. And then I can also have maybe an alt sleeve where I have some alternative investments. You could then create a portfolio based on these sleeves. So I have here the aggressive portfolio, aggressive 80-10-10. And instead of inputting a ticker, which is an equity or an ETF, I can actually input a model portfolio as a ticker. So here I inputted an equity sleeve or my equity sleeve model portfolio, and that's an 80% weighting. My bond sleeve here is a 10% weighting, and my alternative sleeve is a 10% weighting. And then when I create this portfolio, I'm just going to cancel because I didn't change anything. I then have a portfolio with these sleeves. So my sleeve here, my equity sleeve is here, my alternative sleeve is here, and my bond sleeve is here. And then I can analyze the portfolio based on these sleeves, and the system will look through and calculate everything based on a look through of all these sleeves. Let me go back to my my other portfolio, which I was creating, which is a little bit more plain without sleeves. So let me just go back to the balanced global portfolio here. I have a portfolio where my my target weights are in a combination of bonds and equities, and I also have a direct weighting in Apple. And let me go through some of these tabs to show you what some of the analytics looks like. So we went through the summary tab of these different items here. Again, the style box is your traditional style, size, and factor style box, where we show you the percentage of these style scores of the portfolio. So here, because I have kind of SPY as a pretty big weighting, and QQQ and Apple, my kind of where I fall out is mostly in the core side. That's the majority of my portfolio. On the fixed income side, we don't have the granularity in terms of percentage breakdown, but we do show you what is the biggest kind of factor style box. And here, I'm really overweight high credit, intermediate, and that's kind of my biggest exposure. If we go to the next tab in terms of exposures, my asset allocation will let me know kind of like what my asset allocation looks like versus a benchmark that I've selected. So here, my benchmark in my portfolio is a 60-40 portfolio. And so my allocation here is actually pretty close to my benchmark. I have a 60% weighting in equities, a 40% or just under 40% weighting in bonds, which matches my 60-40 portfolio. You can also, if you click on one of these cells, so let's say I click on my bonds, fixed income cell, my equity cell, here we'll kind of break down how your positions are contributing to this weighting. So I have a 60% weighting in equities, and my portfolio weight in VTI is 15.7%. My exposure to equities in this in VTI is 99.7 because it's an equity fund. And so this times this is my portfolio contribution. And so if you add up the portfolio contributions, this is going to add up to 60%. So this is a way to decompose that 60% here. I can also look at the equity sectors and where I'm overweight or underweight on a sector level. So here I'm overweight tech because here my position in Apple and also QQQ. And you could go through these sectors and see what's contributing. You can also sort this table by different things. So right now I have it sorted by overweight, underweight. So I could see kind of what's the most overweight, what's the most underweight. You can also sort this by exposure. So here my portfolio exposure, my blue bars here are going to be sorted with the highest on top. Or you can sort by name, which is going to be just alphabetical order, depending on how you want to look at it. So for my equity sectors, my biggest exposure or overweight is tech. My biggest overweight is kind of tech, hardware, and storage, which makes sense because that's where Apple is categorized. I also have my regional exposure. US exposure is actually below my benchmark, which is mostly a US benchmark. And so I'm overweight Euro and some of these other regions relative to my benchmark that I've chosen. Similarly, on countries, you could do that on a country level and see where the different exposures are. Fixed income sectors is looking at kind of the different fixed income segments and seeing where my exposure is overweight, underweight. We also have a detailed fixed income sector to kind of be more granular. Credit quality is looking at the different credit tranches. So here, my AAA exposure is a little bit underweight, and I'm a little bit more overweight in my kind of more intermediate credit exposure. And that's something we saw in the factor style box, is that I'm sort of in the middle in terms of my credit quality relative to my benchmark, especially. And then lastly, my maturity here. So right here, this is ordered by the duration or the maturity of the fixed income sectors. And so here in my portfolio, I'm overweight shorter duration and underweight longer duration as my exposure. Moving on to the performance chart. So we calculate the performance here since the beginning of the portfolio. So here's my portfolio in terms of what's the performance versus the 60-40 benchmark. This is a total return series that we calculate from the beginning of the portfolio. You can also look at the rolling annual returns. So these are rolling annual returns. And so if I wanted to look at 5-year returns or 3-year returns, you can kind of see how the rolling returns compare the portfolio versus the benchmark. We also have a matrix here with different trailing returns, as well as the return on a monthly basis and on an annual basis for every single month of the portfolio, of the benchmark, and the net return, which is the portfolio minus the benchmark. We also calculate the risk for you. So the risk metrics here and all the calculations go pretty deep into what this portfolio contains and the different risk parameters it has in terms of excess returns, downside deviation, alpha, beta, Sharpe ratio. So depending how quantitative you are, this table contains a lot of the risk measures that folks look for, as well as the top drawdowns. So the top drawdowns here are really looking at different drawdown periods and seeing kind of like what were the top drawdowns historically, and looking at some stress tests. So looking at some kind of different episodes, the Q4 vol spike, COVID crisis, inflation surge, when it started and ended, and how the portfolio did versus the benchmark is also important. We also have the drawdown chart. So the drawdown chart is kind of the blue line is the portfolio, the gray line is the benchmark, and just seeing kind of what those look like in different drawdown periods. And lastly, we have the holdings matrix. And what the holdings matrix represents is basically, this is my portfolio here with BND, VTI, BNDX. This is my weight of the different instruments. And then this is a look through or an x-ray of the different securities here and how much I own. So here we also have a direct column. So because I have a 10% position in Apple, and I also have about a 2.4% position from my ETFs, my overall exposure to Apple is 12.41. But here you can start seeing kind of what are the biggest exposures that are driving your portfolio on an individual security basis. So looking through all these different securities, all these different funds, and seeing what is actually being held in the portfolio. Just a couple more things to highlight in the model portfolio functionality. So one is you can download all these exhibits to CSV. So if you wanted to download, for example, the risk exhibit or the historical returns or whatever, we do have download functionality for all the exhibits to download into Excel. The other thing I wanted to mention is that for all these kind of portfolios on the home page, you can select which columns are displayed. So if you go to if you go to asset specific and model portfolio, and I wanted to look at the dividend yield, I would look at dividend yield. And now this is a column that I have for each one of my portfolios. And we have a lot of useful columns here, including relative return, expense ratio, absolute performance, tracking errors. So any risk measures that you saw in the original exposure analysis and calculations that I showed you is available here as a column. And lastly, in terms of kind of how these portfolios are used, one of the features that our users really love is sharing these portfolios. So you can share this portfolio with a team. You would invite them here. So I could invite my team or my users here. And that way we can be looking at the same portfolios. And that's what these symbols represent, is that this portfolio was shared. When you share a portfolio, they could be either shared as edit mode or read only. If it's read only, the recipients can only view it. They can't edit it. But that's a really efficient feature for teams to collaborate in the on the portfolios. The other feature I wanted to show you when it comes to portfolios is once I have all these portfolios, it's really easy to then compare them versus other securities if I wanted to compare performance or anything like that. So in the security analysis here, you can load a portfolio. So I can filter from my model portfolios here. Let's say I wanted to graph the performance of Balance Global, which I would load here. And then in my graph, I would go to my performance graph, and my balance portfolio is here to compare versus others. So if I wanted to look at kind of the 20-year returns and I wanted to compare versus TLT or versus SPY, or if I wanted to compare it with another model portfolio, so let's say I wanted to compare it versus the balanced US portfolio, that would be here. And so you could compare different securities and see how they did. So that performance tab looks at only the performance. So this is the total return of these securities that I'm putting in here. If you wanted to look at something else like correlation or drawdown, you could look at the historical chart, which is kind of the most flexible chart we have. So this would be the portfolio. Let me just change that to a line so it's easier to see. So this would be the portfolio. And if I wanted to have a drawdown series here, I would add drawdown and look at the drawdown over time. If I wanted to look at the correlation of this portfolio with, let's say, with oil, I would change, instead of SPY, I would change CL1 here for oil. And then maybe we would look at the 63-day, which is 3 months correlation, and be able to kind of like see that correlation. Or maybe, TLT or bonds is kind of like a better, more appropriate correlation here to look at. Really pick and choose what series I want to display here. You can also have multiple series here. So my Balance Global is here. If I wanted to add a ticker here and add another model portfolio here. So for example, my aggressive growth 80-20, 80-10-10, which is kind of the sleeves portfolio that we looked at before. You could add that here and be able to see those metrics for that portfolio as well. The last thing I wanted to show you is how to use model portfolios in reports. So reports functionality is really important for our users. The reports functionality is located in model portfolios. You would go to create report. You can get started from scratch or select a template that you've created, and I'll show you how to save a template, or use a Koyfin template that we've created for you. So let's get started from scratch. When I start a report, I have to select my primary portfolio, and then I would select my benchmark. So let's say I wanted to compare the Balanced Global portfolio that we were using before and call that my Balanced Global portfolio. This is how the name is displayed in the report. So I'm going to call it as name, which is going to say Balanced Global. And here, let's say I wanted to compare it to the 60-40, my benchmark. I'm going to call this benchmark. I would hit next. I would put in some names here, the report title, the client name. You can also upload a logo here. So if I wanted to look at a logo here, and let's say I worked at Hightower, I would put my logo here, click next, and then my logo would appear on the report. And then this is kind of where I would customize the report. So one thing you could customize is a style to make the report consistent with your branding. So you could adjust these colors. If my accent color needed to be a little darker blue or whatever it is based on my company's branding, I would select that here. And then in the pages is where I would go through the report and really choose which pages do I want to display in the report. So here is a comparison summary of the balanced global versus the benchmark, and just some analysis on the fees, the yield, the risk, the performance. Here's my holdings summary of the portfolio. Here's the holdings matrix, or that X-ray view of the portfolio, as well as the benchmark. If I wanted to hide one of these pages, I could do that pretty easily right here. So I would hide that, and let's say I just want the holdings matrix of the proposed portfolio, but not of the benchmark. I could do that here. My equity exposure, my fixed income exposure, my performance charts. And you can also rearrange these. So if I wanted performance to be kind of like more towards the top, let's say that's the thing I wanted to highlight, I would add that here, and now performance would be towards the top. And so you could go through these pages and see what we have here. We have risk, we have drawdown, we have the stock X-ray for the top holdings, the different quant metrics here. Cash sensitivity shows you the cash sensitivity of a hypothetical 60-40 portfolio to illustrate how different cash levels impact performance. Same thing with fee sensitivity in terms of different fee levels, how they impact performance over time for a hypothetical 60-40 portfolio. A lot of our advisors tell us they have these cash and fee conversations with clients, so wanted to include something that illustrates that. And then the disclosures page as well, which you can customize. So if you wanted to input your disclosures, you could do that here, save changes, and those would be the disclosures which are displayed. You can also add a note. So let's say I wanted to add a note here, and then customize this and then write kind of like a summary paragraph. You can do that as well. And that would be kind of a blank page that you can add as a note here and slot in wherever you need. If you kind of customize the order of these reports and what's visible, what's not visible, and what you want to reuse that, you could save that as a template. And so what the template saves is your logo, it saves your disclosures, and it also saves the order of these pages and whether a page is turned off or not. And that way you don't have to recreate that next time you run the report. But when I do want to run the report, I hit create report. It brings up this print dialog, and then I save this as a PDF, and that's going to be downloaded to my computer. The other thing that you can do in these reports is when I'm creating a report, I can compare, let's say, a model portfolio. So if I had a proposed portfolio that was, again, my aggressive growth, and I could compare it to a client portfolio. So client portfolios, remember, are the ones with positions. So if I wanted to compare that to a client portfolio, which is here, I could compare it to Mark Smith prospect. That would be the current portfolio. That would be the proposed portfolio. So this would create a proposal tool where now I can kind of compare, this is my proposed portfolio, this is my current portfolio, and let me walk my potential client through why the proposed portfolio is better or more suited towards the client than the current portfolio based on fees, based on exposures, based on performance, whatever it is. So this gives you the tool to really create that story and illustrate that story in a very easy to understand way. I hope model portfolios are going to be useful to your workflow. If you have any questions, please reach out to us at help@koyfin.com, and we look forward to having you as a customer. Thank you.